Oh, here we go. Getting ready for the live. Oh, I get pumped for this, folks. Come on. Market's up at new highs. Here we go. Hey, I'm Mitch Goldberg. Thank you so much for joining me. This is my live stream. It's called Be the Boss of Your Money. We talk about personal finance, education, investing, business, planning, anything financial. It all comes up here on Be the Boss of Your Money. So while we're watching, you know I love hearing from you, so please hit me up with your questions in the comments. Words of wisdom, words of encouragement in the comments are always appreciated. We're going to talk about the market hitting new highs. The big news, everybody's holding their breath for tomorrow. The Fed has a two-day meeting today and tomorrow, and around 2:15, we should get the final announcement from the Fed of what they're planning to do with their taper, their bond taper. We're going to talk about that. And then what we need to think about in terms of the Fed raising interest rates. So let's roll the quick intro. And here we go. All right. Thank you so much for joining me. It's a high coffee volume day. It's a high volume day. Just everything is just really intense these days. Do you feel like that? Like everything is very, very intense these days. It's not just obviously politics. There's a race for governorship in Virginia between Youngkin and McAuliffe between the Republicans, Democrats in Virginia. So a lot going on in the news. We have the social spending package, which is not a done deal yet, which means the infrastructure package is not a done deal yet. When do we start to worry if those things become a risk of passing or not? We'll see when Biden comes back from his overseas trip. What else do we? We could go into all the things you have to worry about, but let's talk about the market today. So stocks had another rally, not an overwhelmingly huge day, but nevertheless, it's a pretty good day for the market, and we should go over this. But before we even go over the market, I want to look at Zillow. You know Zillow, okay? And let's do a quick share screen. Pop myself up in the corner. Let's get rid of that guy's picture there. Let's get a quote here. Zillow, okay? Make this nice and big so you can see it on your screen. Zillow is getting cracked down 11.5% after market. After being, after market, it's down another almost 2%. So about 13-14%. All right. It's about, that's just stock is getting cracked on the day because they're getting out of the home buying business. I'm wondering if Zillow buying, I don't know how many tens of thousands of homes they bought. I'm wondering if we're going to actually look back and think that Zillow getting into the actual home buying business, it was the peak of the current cycle. That's what I'm wondering. We've had other peaks of other cycles, and there's always something that you look back on and say, aha, that was the moment. I wish I knew how to act on it. So I'm watching a stock like Home Depot, which is still, the high is about 275. It closed at about 267. It's still right up near its high. But we would have to see like a break in the stocks of Home Depot and Lowe's to confirm Zillow going down. But it's just odd that, we've got such a strong home buying market and to see Zillow just get crushed. Zillow's high is $212. It's 52-week high, and it's in the 80s. That's like a $21 stock going down to $8. That is a shellacking by anyone's definition. Okay, let's not put on our rose-colored glasses here. That is a disaster for the stock. So if Zillow comes down so much, and that's like the premier, stock of the home buying trend, I'm telling you, I think we're going to look back and say Zillow, Zillow topped the market. They bought houses, not realizing it's so stupid. I mean, everyone I know said Zillow buying houses is a bad idea. They don't have the people. There's not enough labor and materials to fix up the houses. It's all local. It's a very costly, time-consuming project. What they did is they basically went in and, people want to sell their house. You could either put it on the market with a broker, with a realtor, or you could just sell to Zillow. And from what I've read is that Zillow paid people probably a pretty good price, maybe even a little bit more than what they would have done just listing it in the market with a realtor. I can't say that goes for every single house, but don't get mad at Zillow for buying in the market. You could also be mad at the sellers. You want to be mad at the homeowner who decided, hey, it's just easier to sell to Zillow. I want to cash out and get out of here. But in any event, it's really remarkable to see Zillow go down so much. So let's keep going. All right, back to screen one. So these are some of the significant things that I want to talk to you about. Well, I shouldn't say want to talk to you about. We're done with that. Here's the head. Okay, so screen four. You don't want to work right now. So let me just tell you what the headline is. Zillow shares plunge after announcing it will close home buying business. They said it's winding down its home buying unit called Offers. I think Zillow bought these houses. They spent a bloody fortune, and now what are they going to do? They're going to have to dump all these houses, and do they sell them all at once? I mean, it's like if they sell them all at once, do they hurt the market? Do they hurt themselves? Do they sell them piecemeal? It costs money, by the way, to carry these houses. Houses are depreciating assets. I don't know if Zillow used debt or not. I believe they issued bonds to buy these houses. So this is just like what a what a what a strange turn of events. What else do I want to follow here? There's a couple of things that I'm getting into. Okay, I want to talk to you about something else. I'm going to do a share screen. I think. Oh, here we go. Okay, pop myself up in the corner again. History shows odds are increasing for year-end rally. This is something that we've been talking about. This, it's nothing new here. Year-end rally. Take a look at this. What could drive the year-end rally? That's what we were talking about like a week ago. That was the whole basis of my entire live stream one day last week. But now this comes out today. History shows odds are increasing for year-end rally. And basically what it says is that when you have a good rally in the market through like August through October, it carries over 79% of the time you have a rally into the year end. The point is, calendar wise, October through like April is usually the better time of the year for stocks by a little bit. That's why you hear that expression, sell in May and go away, which works just enough times to suck people into it and get it wrong. But if you are somebody who sold in September and you're like, I don't want to be in the market in October because it's a bad month, it's like, I'm sorry, I'm just going to tell you, it is such a stupid way to make an investment decision. Oh, April's a bad, October's a bad month for the market. Let's just sell and we'll buy everything back in November. You miss such a big rally and you're paying up for prices. You have no idea what the market's going to do in any given October or September. You don't know. And that's why I don't really pay much attention to calendar trading. Well, these particular dates, the market does well X amount of times. You just have to be wrong once to blow up the profits from all the other times that you were right. I don't know of anyone who's ever found it worthwhile to trade, buy in October, sell in May, go away. I've never met anybody who has anything to show for that. Okay. So what else? Well, we don't want these guys here. We want to get markets, US. All right. So the Dow up 138 points, up 0.39%, not bad. Nasdaq up 53, pretty good day, up 0.34. S&P up 0.37. Not bad. Okay. Gold continues to go down. We talk about gold every day. It just stuck around in the 1700s forever. It poked its head above 1800 like 2 weeks ago. And people are like, oh, there's a whiff of inflation. But I said it's got to hold 1800. If it can't hold 1800, it doesn't mean anything. And I've been saying for a long time, gold is telling you that inflation's not so much of a scare. And I've been talking about the 10-year Treasury, see that 1.549. It was like 1.7 a week and a half ago. If the Treasury yield isn't rallying, isn't going up, well, I guess you could say rallying. If bonds are not rallying, see, if bonds rally, Treasury yields go down. So we're using the wrong language. If yields go up and gold goes up, we're talking about inflation. But I think the stock market investors are looking past this current bout of inflation. I think it's generally accepted wisdom that inflation should come off its supply shortage induced jump, and we'll start getting back to normal. All right. A viewer asked me yesterday, and I appreciate that. What I think is the equilibrium for inflation? It's more like, is there an equilibrium that we are trying to get to? Because maybe the Fed wants to force its view of an equilibrium of 2% steady Eddie inflation. That's really what it comes down to. Let's go on a little bit, and let me know how I'm coming out to you guys. Hope I'm coming out nice and clear. The Russell 2000, which was up over 2% yesterday, was up a little bit today, but still, at least there was follow through, and that's what I mean. All right, there was some follow through. We should take a look at crypto. Crypto had a good day again today, up 3.5% on Bitcoin. This stuff really is jumpy, by the way. It's not uncommon for Bitcoin to be up 3.5%. I think there's a lot of people who are trading. I think crypto is still a pretty thin market. However it goes through real-time trading, you could watch it. It still is a pretty thin market. And just keep in mind that even though, let's say, Bitcoin's worth, let's say it's worth $1 trillion now, if you take, if you add up every Bitcoin, it doesn't mean that all $1 trillion is changing hands. It's usually a small amount of anything, whether if it's stocks or oil or gold, that's actually changing hands. It's that marginal amount that's being traded, which is determining the price for the overwhelming volume underneath that trading. Just to let you know, that's what we call it, the marginal trade. Just a good day all around for crypto. Let's take a look at the Doge. I don't know why I just like looking at the Doge, but Doge at 28 cents. It's been 24, 25 cents. I don't follow that new one. Is it Shibu? I just don't follow it. I don't even know. I guess I could look it up, but it's not something that I'm really interested in. I want to talk to you about this Fang. All right. So let me. Fang wants to change. Jim Cramer. Okay, we all know who he is, and just super nice guy. I've met him before, and like the way he comes off on TV is actually how he is in real life. He came out with the acronym Fang, and he wants to change it to Mama, MAMAA, Mama. Okay, for let's say Microsoft, Amazon, Meta, Apple, Alphabet. Alphabet is Google. He used to say Fang, which was Facebook, Amazon, Netflix, and Google. I took out Netflix out of my acronym, which I go with Fang M, which is Facebook, Amazon, Apple, Nvidia, Google, Microsoft. I took out Netflix a long time ago because it just didn't keep up in terms of market cap with the other stocks in that group. So I went with Fang M. This is basically the same exact stocks, but instead of using the F, like the Facebook symbol, he'll use M for the Meta. Instead of using the G for the Alphabet symbol. See, I feel like I have to say this all the time. This is why these name changes don't make sense to me. Google is Alphabet. Did you know that? A lot of people don't know that. Google changed its overall name to Alphabet. And the Google division of Alphabet is just their search engines, which is like 90% of the company. And then you've got other sectors, Waymo and other parts of Alphabet. So, but we still use the G for the symbol in Fang, M, and Fang. But now people going by the A for Alphabet. So maybe people will stop talking about Google in terms of Google and start talking about it as Apple, which is the name we should be using now. And Facebook will maybe start calling it Meta. As far as I know, Facebook is not changing their ticker symbol. Maybe they will. I really don't care. If they do, they do. Whatever. And the whole Meta thing is just about the confluence of virtual reality, augmented reality, and real life converging. Think about wearing your goggles where you could see what's in front of you, but different things will go in, different characters or software codes or pictures will go in front of you to look at things. Like you might, let's say you look at the Empire State Building and you'll see it, and then little pop-ups will show up. It's got 102 floors. It was built in, completed in like 1930 or 31 or something. Whatever information comes up. So let's say you're doing your own sightseeing tour around Manhattan. Something like that. And then you get a call from your mom, and your mom could see you, and you could see your mom face to face and having like a Zoom chat, but with just glasses on, maybe. Okay. Maybe it'll be a little bit more 3D-ish instead of just a flat screen like what you're watching me on and what you watch TV on. We'll see. But that's the convergence. I think everything was going that way anyway. But Facebook decided to double down. They say they were planning on doing this for a long time before that whistleblower came out and shared documents from Facebook saying that it knew about the harm it's causing to adolescents, in particular adolescent females with body types and things like that on Instagram. And they knew that there's a lot of downside to social media. I think we all knew there's a lot of downside to social media, whether people wanted to admit it or not. I mean, there's a lot of upside to it also. I'm not defending Facebook. It's all how you use it. Like we say, guns don't kill people, people kill people. But with social media, social engineering, you don't even know that you're being pushed or pulled or manipulated into doing something with social engineering. It's kind of why I can't stand Robinhood, the brokerage firm, because it gets people to do things they shouldn't be doing. And I feel like if you have a relationship with Robinhood, the investment app, I feel like you are somebody who is stuck in an abusive relationship and you just don't know it. It's like people who are stuck in an abusive relationship, you say about that person, how could they be in that relationship? And sometimes they just don't know it, or they can't help it, or they don't know any better. And I think that's what you get when you have a relationship with Robinhood. What do you think? Do you agree or disagree? All right. So if you have any comments or questions, though, I'm sorry, I'm not supposed to ask for comments. If you have any questions, let me know in the comments. That's what I'm trying to say. I'm mixing up my words. Okay. So let's take a look at some of the stocks today. All right. Industrials, you might not think of it this way, but industrials are now like the ESG plays. Most of the reason why I didn't love investments that focus on ESG, environmental, social, and governance, is because ESG funds were basically tech funds. That's what they were. It's just technology funds. And now you're getting into other companies. I spoke about this yesterday. Companies like Ford and General Motors are becoming ESG plays. Companies now like Eaton Corporation, Emerson Electric, ABB, companies like Johnson Controls. These, are now looking like they're ESG because they're manufacturing products that are making the world more energy efficient, like Johnson Controls. If you have a car and every time you stop, the engine turns off, you take your foot off the brake, and the engine turns on, That's a Johnson Controls technology device. But I usually don't look at industrials with you guys. I usually look at the broad strokes. Let's look at the Fang M stocks. Okay, Apple was up a little, 150. Amazon still roughly between its high and low. Facebook, I don't know when Facebook's going to get out of its own way. I think the controversy is going to pass. Oh, you know what's really big news? This is what I want to show you. Facebook plans to shut down its facial recognition program. Do you know what that means? You know, when you go on Facebook, you take a picture with a bunch of your friends and you tap on the picture and Facebook automatically knows who's in the picture because you're using facial recognition technology, and it's very good. It works very well. They're shutting it down, which affects something like 600 million daily active users. So it's going to be a little bit of a pain in the neck now to tag your friends and family in a picture in a Facebook post. But people feel it's intrusive. Facebook shouldn't be storing your likeness because maybe they could use your likeness to open up other apps and other devices. And maybe they'll take a scan of your iris or your thumbprint. And these are biometrics. These are biometrics identification points. Your face, your iris, your thumbprint. Okay, these are biometrics that can ID you, and they're almost like having your password, right? In a lot of cases, they are your password. You know, how many of us open up an app like a banking app, for example? How many of us open up an app like a banking app, for example, with just our likeness, with just our face? How many people were unlocking their iPhone with a thumbprint? Now it just recognizes your face. So anyway, Facebook is going to stop. They're going to stop using facial recognition, and the company said it will delete more than 1 billion people's individual facial recognition templates as a result. Facebook services that rely on face recognition systems will be removed over the coming weeks. I'm not sure what kind of ramification that's going to have on society at large. I don't really think it's that big of a deal. Do you think it's a big deal? I don't really think it's that big of a deal. Let's take a look now at the sectors of the market. Let's take a look at the winners and losers. All right. Okay, so the winners: building materials, real estate, technology was up there. State consumer staples was up there. It was overall consumer discretionary and energy were off a tiny bit. But just to give you an idea, XLE, that's the big ETF that tracks the energy sector. All right. This is up on the year 52%. So the fact that it's off a little bit today, it's up almost a double, up 95% in the last year. Who cares? Still pays a 3.73% dividend yield. Okay. So these are the things that we take a look at. So that's my story for today. Really, we're in a holding pattern. The Federal Reserve will have the end of its 2-day meeting tomorrow. And around 2:15, what we're expecting is its plan to taper. The Fed buys $120 billion worth of bonds every month to inject capital liquidity into the U.S. economy. 40 billion of mortgage bonds, 80 billion of treasuries. They're going to buy less and less and less of those kinds of bonds every month for the next, let's say, 7 or 8 months until they're not buying any more. And that's the end of their quantitative easing. And that means, buying less and less and less. They're tapering it back, scaling it back. Why don't they just say scaling it back instead of tapering? I don't know if it's tapering. And then we get into interest rates. Does the end of the tapering begin the countdown to raise interest rates? The Federal Reserve has said they're not tying their countdown to raising interest rates to the tapering. One has nothing to do with the other. But if inflation keeps perking up or doesn't back off the way we expect, then we have to look at interest rate hikes, and interest rate hikes have a way of introducing new bear markets and slowing the economy. We have a lot to go through, but in that meantime, we've been climbing a wall of worry, setting new records, seems almost daily for the last 2 or 3 weeks. The Dow hit 36,000 for the first time ever yesterday. Didn't close there, but it did hit it. Um, so these are the things that we're going to look at. Today it did close above 36,000. You can see that right here. Okay. So the Dow closed above 36,000 today for the first time. Not much to complain about. I'm going to get going. I've got to take care of a couple of things that I'm sure you want to get on your way as well. I'll be back tomorrow with more good stuff, and we'll be talking about what the Federal Reserve has said, Jerome Powell, and all that. All right. Thank you very much for watching, and I really, truly appreciate your taking the time. All right. See you tomorrow.